Hey guys, it's your boy Kirk Richards with needtosell.com, back at it again with another informational video for you. Today we're going to be talking about what it's like investing in real estate in 2023. So investing, as you know, has many different avenues that you can go down. So I'm going to start off with wholesaling. With wholesaling in 2023, we are experiencing longer sell cycles. What does that mean? The time that we get in contact with a seller, it's taking a longer time for them to make a decision on when they want to sell. The reason being is they don't know where to go, right? It's a lot harder nowadays to get properties on the buy side just because of higher interest rates and lack of inventory as well. Inventory started to creep back up a little bit, but there's still not enough houses out there for people to get to. So a lot of sellers are wanting to stay put. They're wanting to wait for whatever reason. They're taking their sweet time on wanting to move from the house that they're in, if they're in the house. Two is on the sell side, right? We deal with a lot of cautious buyers, right? So let's just say you have a property under contract and you're looking to push it to an end investor. Well, now a lot of these buyers are moving very, very strategically. And the reason being, again, higher interest rates. They're taking on more risk when they're buying these investment properties. So they want to make sure that their numbers are solid, that the spread is big enough for them to make money, and they can get out of the deal as fast as possible. So in return, with people offering a lot less on our deals, right, or on the deals that you have as well, you're going to have to start getting your contracts at lower prices as well. Now, that can be a problem because, as you know, the last 2 years, we went through a surge when it came to prices in homes because of the demand that was there for sellers. So we were in a seller's market. So the seller's mind frame is still kind of in those golden age years for them, whereas the buyer side isn't really matching up, right? So you're gonna run into a lot of people where they're still gonna want those crazy prices that were being given out during the COVID years. So you're gonna have to really get your sales skills up to par to be able to educate the seller and let them know yesterday's price is not today's price. Yeah, it's something you have to have in your tool belt, something you have to be prepared for and be ready to explain to a seller when you run into that situation. So that's wholesaling. There's a few more things that go in there. It's more so on the marketing side. We'll get to that in another video. But for the most part, top line view, you're looking at longer sales cycles, more cautious buyers, and then you having to get the contract at a lower amount in order to procure for your buyers. So that's on the wholesaling side. For those who are looking into doing, let's just say, a rental. For the rentals, that's very interesting as well, because the interest rates that affect fix and flippers and people that are doing hotels or getting loans, those are the same interest rates that are affecting you on the rental side. And I'll show you. So simple numbers, right? About a year and a half ago, we had a property where we were looking to refinance one of our rentals. We went out to a couple of lenders to get a DSCR loan. And at that time, the rate was 6.25%. We're gonna use basic numbers. Let's just say $100,000 property at a 6.25 rate, amortized over 30 years. Typically, when you're looking at your mortgage, you're looking at PITI, but this is just principal and interest. So just principal and interest payments alone. This payment amortized over 30 years. So $100,000 over 30 years at 6.25%, it's roughly $615 in principal and interest only. That same property today, we recently went in to another lender and we now have a rate of 8.75% over the year. That amount is roughly $786 a month in payment. That's principal and interest. The difference between these two, $171. That's $171 a month that is being taken out of your cash flow when you're renting properties. The interest rates are affecting everyone across the board, which is why, right, you wanna know before going into the rental game, you wanna know, okay, when I go to refinance this property, what is it gonna cost me, right? Do I need to be lower on the front end? Do I need to make sure I'm not over rehabbing? You take all these things into consideration. So these are some of the things that we're seeing investing in real estate in 2023. Again, rental wise, you're being hit with interest rates, so your cash flows are getting smaller. With wholesaling, those same interest rates that are affecting end buyers, right? It's affecting what you have to do up front to provide those deals for those end buyers. So there you have it, very top line. If you have any questions, shoot me a comment down below, like, comment, subscribe, hit the notification. We have more coming to you.